Hi everyone, welcome to my channel. My name is Reni. If you're new here, welcome. And if you're a returning subscriber, welcome back. I really do appreciate you for taking your time out of your busy day to watch this video. So if you are new here, as I said, my name is Reni, and on this channel I make content about financial literacy, career development, and lifestyle. So if any of that content appeals to you, feel free to hit that like button and give me a subscribe because this helps the family grow. As you can tell by the title, today we're going to be focusing on financial literacy and specifically what to look for before you actually invest in the stock market. So if you are brand new to investing in the stock market, you definitely need to know this information. This video is for the people who really want to understand what they are purchasing before they purchase it. All of us should ideally want to know this, but I know some people take a more passive approach. Totally cool. Today we're going to go deep. We're going to do a deep dive into some of the things that you should look for when you are researching a stock before you purchase it. Before I start with this video, I just wanted to emphasize that this is not investment advice. This is simply a few things that you can take into consideration when you do choose to invest. And secondly, I know that picking individual stocks like I'm going to be talking about now can be a profitable strategy. However, it is extremely risky because you are putting all of your eggs in one basket when you pick an individual stock versus when you pick a group of stocks, your risk is kind of spread out amongst them. Although this can be a very profitable strategy and I've done it for many years, it is not for everyone. So make sure you do your research before you purchase any stock. If you still plan to purchase individual stocks, then this is the video for you and keep watching. I am very honored to say that this video is brought to you by TD Direct Investing. TD Direct Investing is a leader in the self-directed investing space and a brokerage that I have been using for the past 8 years. Last year, MoneySense awarded them the best online brokerage in 2022, and I think it makes complete sense why. One thing that really makes TD Direct Investing stand out is the personalization that you can do on their platform. Since we all have unique investing needs, being able to customize the dashboards and the charts to fit what I want makes all the difference when I'm monitoring my portfolio. I also really appreciate the fact that TD has its own built-in goal planning tool, which allows you to set your own goals and track your progress towards them. It is still the first quarter of the year, so if you have not yet set your financial goals, this would be a good tool to help you do so. Since we are discussing researching stocks in this video, this is the perfect time to hype up their platform and their research center specifically. They have all the research that you can possibly think of all in one place, so you don't have to go to a bunch of different websites in order to get the information. It's all located centrally in their research center. To open an account with TD Direct Investing or to just learn more, you can use the link in my description box. Happy investing! Now let's get into the video. So the first thing you want to do before you choose to buy any company is to research the company. One of the best things that you can do is to find their annual report. All publicly traded companies are required to create an annual report which has all of their earnings details and a lot of information about the company. All the information is there just waiting for you, so go and investigate it. Some questions that you should ask yourself is, what does this company actually do? What is their business model? How do they make money? Who is on their management team? You know, these are the questions that you want to ask. Personally, I don't like to invest in things that I don't understand. So I want to make sure that I understand how this company that I'm about to give my money to is actually running their business. The next thing that I want you to do is to check the fundamentals. This one is a little bit more complicated and it requires a little bit of math. I know we're not all a fan of math, but the fundamentals are super important. I'm gonna share with you a few numbers that I look at when I'm analyzing a company, and none of these numbers can actually be interpreted in a vacuum. So you can't see one of the numbers and then make an interpretation based on that. You have to look at the number and then compare it to their industry, compare it to other things that are going on in the company. So that's just a preface before I get into it. So the first thing you're going to look at is the balance sheet. This is a financial statement that covers all of these different things like the assets, the liabilities, and the equity of a company at a given point in time. So I don't know about you, I learned this in accounting class quite a long time ago, and the balance sheet actually can give you great information about a company. The first thing that I would look at would be the cash that the company has. how much cash does the company have on hand? With the cash that they have on hand, are they able to cover the liabilities that they may have? Are they able to pay their employees on a monthly basis? These are the questions that you want to be asking. So you can see how much cash a company currently has on hand just looking at their balance sheet. From all the numbers that you see on their balance sheet, you can also calculate the debt ratio. Debt ratio is calculated by dividing the total debt that a company has by their total assets. Again, these are formulas that you can find on Investopedia or a lot of different websites. What this formula really shows you is how dependent a company is on their debt. Remember, when you are interpreting results for this, you need to look at a whole bunch of other factors to see what this number actually means. You have to look at their industry, for example. Or you can look at, okay, a startup probably has a lot more debt than a more established company. So these are the things that you have to take into account when you are seeing the debt ratio. Another thing that you can calculate from the balance sheet is the current ratio. The current ratio is calculated by dividing the current assets by the current liabilities. When I say current assets, this means assets that can be turned to cash in 1 year or less. And when I talk about your current liabilities, these are debts that will be due in 1 year or less. So you take your current assets divided by your current liabilities, and that gives you the current ratio. What this represents is whether or not a company is able to meet their short-term obligations. So are the current assets able to meet the current liabilities? These can be things like the tax payable, accounts payable, wages, all of these things that are due within the 1 year. Does that company have enough cash to meet all these obligations? And the reason this is important, because if they can't meet their obligations, then should I really be investing in this company? Again, when you're interpreting this ratio, you really have to look at a lot of factors. You have to look at the industry that this company is in. You have to look at the type of debt that they're holding and all of these different types of things. Okay, so that was the balance sheet. And again, there are so many things that you can calculate by looking at the balance sheet, but those are three of the main things that I would look at when you are looking at it. Now let's go into the income statement. An income statement is a financial statement that shows you the general performance of a company. It will show you the company's revenue and expenses over a certain period of time. That would be a main difference between the income statement and the balance sheet. With the balance sheet, it is at a specific date that you're getting those numbers, where an income statement would be over a period of time, which is why it's important to look at both of them, because they tell you very different information. So this statement will show you the revenues and the expenses of a company, but also if those revenues or expenses are transformed into a net profit or a net loss. One thing I would pay attention to on the income statement would be obviously the revenues, and you can see the expenses, but you really want to look at what the operating margin is. The operating margin will tell you how much a company makes on $1 of sales after paying for all of their variable costs of production, such as like wages, raw materials, but before they pay interest or taxes. I would say this is a true measure of the profitability of a company. Another ratio that I like to look at is the earnings per share. This is a little complex to calculate, so you can actually find it typically in the annual report of a company. You don't really need to calculate it yourself. And the earnings per share lets you know the value of a stock in terms of how much the market is willing to pay for each dollar of earnings. So for every share that an investor holds, the investor will get X amount of income. That's what the earnings per share will tell you. In general, the higher the EPS, the better. But again, to interpret this truly, you need to look at a whole bunch of factors. Another financial statement that you can consider looking at when you're researching a company is a cash flow statement. A cash flow statement demonstrates how a company utilizes the cash that they earn. So it shows you all the inflows of cash into the company and all the outflows of cash out of the company. This again shows you how money is moving throughout the organization, and you can see, is a lot more money moving out of the organization than in it? And if so, do I want to invest in a company that has extreme outflows of money and they're not able to replenish it but through sales? Now that we've gone through all those financial statements, let's go through and look at some more qualitative factors that you can consider when choosing to invest in a company or not. So remember earlier when I said you need to research the company, learn what they do, learn how they do it, learn how they make money. Well, you also want to compare how they are doing to their competitors, because it's great if I am doing an amazing job, but if my competitors are doing something 10x better, then maybe I want to invest in the competitor instead of this company. So these are things you need to look out for. So when you're doing your research on these companies, look at the industry averages of sales in that industry. Do other companies in this industry have a clear, sustained competitive advantage? Does my company that I want to invest in have a clear, sustained competitive advantage over their peers? If they do, this may be a leader in the space and something I want to invest in versus their peers. Another thing that you may want to consider when you are investing in the stock market is the dividend yield history of the company. So if you didn't know, when you purchase a stock of some companies, they will pay you a dividend, which is a nice cash payment that you're paying you every quarter or annually. And this is a thank you for owning their stock. So they issue these dividends on a quarterly basis or whatever period they choose. So if you are investing for the purpose of getting dividends, you definitely want to look at the dividend yield history. Have they consistently been paying out dividends for the past 10 years or however long they've been issuing dividends? What has their dividend looked like over the past 10 years? Is it very consistent, or is sometimes it's very low, sometimes it's pretty high? Look at what the dividend yield of this company is. Again, this will not apply to all stocks because not all companies do issue dividends, but if you are looking for a company that issues dividends, the dividend yield would be something that you definitely need to look for. Another factor that I consider when purchasing stocks is analyst reports. I am wise enough to know that I do not know everything, which is why I like to rely on people who know a lot more than me to give me information. So what I do is I rely on the experts. Look at what people who get paid to do this are saying about these companies. Of course, their advice is not a law, but it's something to help guide you, and you can see if you may want to invest in this company or not. If all the analysts are telling everyone to avoid this company, maybe, just maybe, you might want to avoid it too. So look it up. What are business experts and news analysts saying about these companies that you are looking to invest in? One thing I really like about TD compared to other platforms that I use is that they have an in-house research center. So you can actually look and there are analyst picks. For a bunch of companies that you want to buy, it'll tell you if it is a buy, a sell, or a hold. So they recommend that you buy this, they recommend that you sell this, or they recommend that you hold and continue to hold if you still own it. This is a big factor that helps me decide what I should purchase next. And I would encourage all of you to look into that too, because again, they know way more than we do, and we should definitely rely on them, especially if the information is there for us. One more thing that I would suggest that you look for before you purchase a stock is look at news about the company. What are people currently saying about this company in the news? Are they saying good things? Are they saying bad things? Is there any controversy with the company or with the management team? Is this industry that they're in a solid industry, or is this an industry that is on the decline? Of course, news can definitely be sensationalized, and we take everything that we see online with a grain of salt, but it does help guide your opinions. If there's only negative news about a company and the news, or if there's lots of controversy with the management team of the company, that may be a red flag and could tell you to leave ASAP. Remember, we want to put our money where we feel like it will be safe and it will be in a place that it will help it grow. If there's somewhere that is constantly littered with criticism and negative thoughts, personally, I don't really want to put my money there. I'm very cautious about where I put my money, so these are the things you should look out for sure. Okay, so those were a bunch of factors that you can consider next time you want to purchase a stock of a company. Let me know, did I miss anything? Are there things that you look for that I may have missed in this video? Of course, this is not an extensive list, so if you want me to do a part 2 where I share even more things that you can research, let me know by leaving a comment down below. Thank you so much for watching this video. I really do appreciate you for watching. Make sure to visit the link in my bio to learn more about TD Direct Investing, and I will see you in the next video. Bye!